If you currently own a home and you're trying to buy your next home, you need to have an exit plan. That means talking with a lender as early as possible to figure out what is and is not possible when you are trying to both sell and buy. Before we talk about all these different options, let's talk about contingencies, because this is really important to the discussion. When you make an offer on a home, you're going to outline your contingencies, meaning you're going to say what your offer is contingent on. Maybe that's financing, maybe you have certain inspections, an appraisal, or in our case, what's pertinent to our discussion, whether you have a home to sell. A home to sell contingency just means that you have a home to sell. So you want to buy that home, but it's going to be contingent upon your home selling. In certain markets, that might not be a big deal. If it's a balanced market or if it's a buyer's market, they'll say, sure, we'll wait until you sell that home. But if you're in a competitive market, what do you think happens to those offers that have home to sell contingencies? They go to the bottom of the pile. Because if they've got 3 other offers that are not contingent upon a home to sell, well, that looks a lot stronger to that seller. Got it? Okay, so let's go over all these options. The first is the easiest. Maybe you don't have to sell that home in order to buy the next one. If you have enough in savings, you have enough income to, on paper, carry both mortgages, whether you want to or not, you have the ability to buy that home. You don't need to sell that home. That's always great because it eliminates the hurdle altogether. But a lot of people aren't able to do that. So what do you do if you can't do that first option? Second option is that you make offers that are contingent upon your home selling. You're going to have that home to sell contingency. Just know, in a competitive market, you are at a severe disadvantage. The third option is you sell your home first and you either find a temporary living situation, or maybe you get rent back from your buyer. So maybe you get a 60-day rent back and you can try to find that home within those 60 days. And during that time, you haven't actually had to vacate your home, but you do have to find the next home, and you can make those offers now without that home to sell contingency. Now, a lot of people don't like this because you're kind of threading the needle. You have a limited time frame, and or you've got to move out and find a temporary living situation. So for some people, this doesn't work out. If you've got a lot of pets, if you've got kids, or maybe just your living situation doesn't allow you to just move out and then move somewhere else without causing major hassle and also incur a lot of costs. Now we're going to move into the options that allow you to stay in your current home without having to sell the next one. So the first option, you can get a home equity line on your current home. So this requires some planning because you can't just get a home equity line, okay? It's going to take a couple weeks. But again, if you've talked to a lender well in advance and you say, okay, income-wise, I can carry all these things. I just don't have access to the equity in my home. So if income really isn't a factor here, but getting a hold of the equity in your current home is, then basically what you're going to do, you're going to take this home equity line out. And this essentially is the money that you would have net from the sale of your current home. You're getting in advance. It's like a bridge loan, but in reverse. You're going to take out this loan. We have to qualify you on the mortgage that you currently have, the home equity line, plus the new mortgage. But again, this is a great option for people who have lots of income. They just want to have access to the equity. This is a great way to do it because you can move into your home. We qualified you on all those payments. You can now sell your current home. And then when it sells, it just pays off your first mortgage and the home equity line. The cost for home equity lines is typically very, very cheap. Typically, when you sell home equity lines, if they haven't collected closing costs up front, they will recoup some of those when it gets paid off. It gets paid off within a short amount of time. But it's very low cost when you compare it to the alternatives. So if you can qualify carrying all those mortgages, taking out a home equity line is a great option. Now, what if income is a stumbling block for you? So let's say that you can't qualify carrying all of those mortgages. So your current mortgage, the new mortgage, and the new home equity line. So what could be an option for you if you have a lot of equity is going to be a bridge loan. Allows you to take out a little bit of cash from your current home. But more importantly, that bridge loan is a purchase contract against your current home. So it has no contingencies. It's already a done deal. It is temporary in nature. Ours is for 6 months. They build in 6 months worth of payments, so that payment is eliminated completely. So that solves the income problem. You only have to qualify for the new mortgage. So this solves a lot of problems. It eliminates the first mortgage. You haven't created a second payment with a home equity line, and you get a little bit of cash from the bridge loan. So this is a great option for someone who has a lot of equity, but they don't have enough income to make it all happen. So this allows you, again, stay in your current home, buy the new home. When the home sells, bridge loan, mortgages, all that stuff gets paid off, and then you're already in your new home.